Good afternoon, everyone. Apologies, I'm not Robin Birchall. He hasn't been able to attend today. My name is George Don. I'm the VP of Business Development for Giyani Metals. And basically, to get into it, so for anybody who's not familiar with the company, we are a battery metals development company with a suite of manganese oxide assets in southern Botswana. So most people don't necessarily associate manganese with battery metals, but it absolutely is one. If you think of the major battery cathode materials, the prevailing chemistries at the moment are NCM, so nickel, cobalt, and manganese. And just with nickel, it's a product which is a battery-grade manganese sulfate, and of which there is a very limited supply in the world at the moment. Most of the market is supplied out of China. About 85 to 90% is Chinese production. And there are only one or two companies actually producing directly from ore to high purity sulfate in the world outside of China. So this is a very rare project in the face that we are going directly from our ore body all the way to the final battery grade product. So myself, I've been involved in mining finance for about 20 years. I was previously with JP Morgan's Mining and Metals team in London. I was most recently with Greenstone Resources, which was a private equity fund, before joining Giyani a couple of months ago. And the economics behind this project are immediately eye-catching to anybody in the mining finance arena. We released a PEA over our initial proposal project earlier this year. And as you can see, with a low capex of about 150 million Canadian dollars, we have an internal rate of return post-tax of 80%, with an NPV of almost $450 million. And the reason for that is that because we're going actually all the way through to the final cathode product, it's a very low volume, high margin business. So we're looking at an initial capacity of around 100 to 120,000 tons a year of sulfate. And that will be from basically our three primary projects. And I'll quickly skip ahead just to show you where those are. So we are located in the very southern tip of Botswana, which is, of course, an excellent mining jurisdiction, very, very close to the border of South Africa. So we're about a 4-hour drive from Pretoria along a tarmac road. We're also then connected by rail down into the South African rail network, going down to the ports of Durban and Richards Bay. But we also have a direct road line going across to Walvis Bay in Namibia. So in terms of location, we're excellently situated in terms of both exporting product, but also in terms of receiving reagents. We're connected by power, we're connected by tarmac roads, we have water accessible close to site. So to develop a project, it's an excellent position to be in. But just to go back a little bit in terms of manganese and where it fits into the battery market, because that's the most important part of the story. Right now, because of sort of the nascent nature of the EV market, the amount of manganese which is utilized in the battery sector is quite small. It's probably less than 0.5% of all the manganese that's used in the world, and it's around about 30,000 tons a year of metal contained is used. Based on the projections, from various parties, so from the likes of Benchmark Minerals, from the likes of Romotion, they are predicting that by the end of the decade, the consumption of battery manganese is probably going to increase at least tenfold to about 300,000 tons. That's quite a conservative approach, and these numbers are a bit outdated. They actually came from a benchmark report in 2019. It's probably closer to 500,000 tons is going to be required. And by the end of 2040, they're predicting a deficit of nearly 1 million tons. That includes all known projects that are currently either in commissioning, in expansion, or proposed to be built. There is simply not enough of this material around to solve the battery industry. And what we think, obviously, in terms of the volumes of amount of cars that are going to be built, that's a very strong part of the story, but also the actual chemistries themselves are changing. So if you look at the releases of companies like SVolt, like VW, like BASF, they're talking about these high manganese formulations because they're essentially seeking to eliminate cobalt because it's very expensive, it's difficult to trace, the sustainability issues around it are very difficult. So what they're looking at, particularly for their mass market vehicles, is they're looking at price and they're looking at reliability and safety. So high manganese formulations are predicted to become more and more prevalent as the years go on, particularly from 2030 onwards, for the mass market, small range, non-high-end vehicles. So this is when you look at VW, when they give their sort of outputs in terms of their battery days and their chemistries, they are talking about going from sort of currently a 20% manganese content in their cathodes to 60-70%. So we're certainly hearing from the automotive industry that manganese is very much going to be part of the prevalent chemistries going forward. So going into the economics themselves, they are eye-catching. They're at a PEA stage, so you have to give them the necessary caveats that come along with that. But what's most important to think to consider at this point is that although the rates of return are very, very good, the mine life when this was done was still very low. So we were actually looking at a mine life of less than 10 years. And the reason for that is because at the time, this was only the K.Hill project that had actually been adequately explored. So I'll skip ahead briefly. So this is the K.Hill ore body here. And as you can see, at the time, it had been drilled up to an inferred level, and we had a resource at that point of about just over 1.5 million tons. Since the drilling has been done as part of the feasibility up to indicated level, we've discovered a second ore body, the B horizon, which sits below the main horizon. So we have doubled our resource in that time. And so we now have a 3 million ton resource, and so we have a life of mine which is now extending well beyond 10 years. As we've continued to explore, we've discovered that this B horizon extends all the way down here into this, what we're calling the K.Hill extension. We don't formally have numbers yet on this from SRK, who have been doing the geology, but as you can see, it's roughly the same size in aerial extent as K.Hill, and there's nothing yet in the geological results to indicate that that will not play out necessarily when the numbers come in terms of the resource size. Further to that, in the meantime, we've been drilling the Otzi ore body. So this is about 40 kilometers to the east, close to the South African border. It's a different style of ore body, but we've released sort of recent intersection results from the drilling there, and we're having intersections of 50 to 60% manganese. So although we don't necessarily know about volume, we don't know about tonnage, what we do know is the grade here is very high. So while we had an average grade for K.Hill in the PEA of about 25%, here we're expecting grades of 30% or higher on average. So not only are we going to significantly increase mine life, but we're also going to significantly increase certainly grade in the early years. So in terms of what we're expecting, in terms of economics, actually we think that this number, the $300 million number, to be honest, is probably quite conservative. And of course, with the ignition, now having increased the tonnage from the 1.5 million tons here, probably set to double, maybe even set to double again, depending on how the exploration goes, and we can't say how that will go, then you're looking at a mine life in excess of 30 years. So the next step, of course, is to look at increasing capacity. And if we can increase capacity, if we could double capacity, even if we double CapEx, it does not make a dent in the economics. It is game-changing for this project, and the economics go significantly higher. And I think what's worth bearing in mind, so where we are in terms of our timeline at the moment, so we are completing our feasibility study. That is due to be completed, and we're very, very close to finishing the flow sheet at the moment. We've announced that we've finished the polishing stage, so we now have a stock solution, which a number of prospective customers have actually asked for samples of already. But that has been supplied to a crystallizer manufacturer for the final part of the metallurgical test work under the feasibility. When that is completed and we have produced some of our final high purity product, that flow sheet will be finalized, and we will be handing it to an engineering firm for construction of a demonstration plant. So within around the next 6-7 months, we expect to be producing final product around about 200, 250 kilos a day, which we can then give to our customers for processing. And what we have been learning as we've been expanding the marketing side of it and sort of getting more into who our customer base will be, we've had very, very strong interest, particularly out of Europe, for a lot of the gigafactory producers or the prospective gigafactory builders and the automotive producers. We have announced that we have signed a product sharing agreement with a major OEM. We can't say who they are, sadly, because they're extremely protective of their confidentiality. But we are supplying product to them for their testing, for their chemistries as they design their cathodes. And what's noticeable is when we first started speaking to them about this about 3 months ago, they were asking for a small volume of product, as soon as possible. That they've trebled their order in terms of what they want. So this is very much, they are very sensitive to the fact that they do not want to be beholden to such a high level of Chinese production for such a critical material. Obviously, for their supply chains, it's very delicate. But more importantly, from a sustainability point of view, and where the regulatory environment is situated, it is extremely tight on the automotive industry to improve their supply chains, to improve their sustainability, traceability. And to do that within the current Chinese environment is extremely difficult. It's extremely difficult to due diligence, and a lot of it is coming through the trading, through the Chinese traders, and so it's very hard to verify all the way down the chain into the raw materials, where they're actually being mined, who is actually developing them. So we hear very, very clearly from the automotive industry that for us to be a supplier, ESG is not something that it is nice to have and that that is expected of us. If we do not have full compliance with all of their ESG requirements, we cannot sell to them, because it is what they are looking for is they're looking for purity, they're looking for sustainability, they're desperately trying to diversify out of China. And as a final point, and so I have rushed through in terms of where we sit in terms of the environmental competitiveness of this project, not only is it located outside of China, which makes it very attractive, but we are doing an LCCA, a life cycle carbon assessment, to go along with our feasibility. Because we're producing a final product on site, we are not producing an EMM metal and then remelting it to make sulfate. Our energy utility is far, far lower than a lot of our Chinese competition. And because we are looking to integrate solar into the energy mix, it means that on anecdotal evidence from what we've heard from a number of cathode and pre-cathode purchasers at the moment, we are somewhere around 20% of the equivalent carbon footprint of those Chinese producers. So even if this was a diverse industry, we would still be highly competitive from a sustainability point of view. But the very fact that the industry is so dominated by China and the automotives are looking to release that dominance, it is the reason why one of the largest car manufacturers in the world is speaking to a company with a market cap of about 75 million Canadian dollars. And with that, is that time up? I'm sorry. So I'll just leave you with the details on screen of the company itself. And we have launched, we announced last week that we'd launched a $10 million bought deal. So we are fully financed through to completion of the demonstration plant and through for all the feasibility and the subsequent exploration and indicator drill work.